Welcome back to the Daily Crypto Roundup, the show where we break down the biggest stories shaping the crypto markets, what's been driving price action this week, and what we can expect heading into next week. And today really is one of those episodes where the pieces are all connected. Bitcoin's breakdown into the mid-$80,000, over $1 trillion wiped from the crypto market, cascading liquidations that hit nearly every major asset, surprising altcoin outperformance in the middle of the chaos, and a few early signs that next week might offer a bit of stability after a rough stretch. So settle in. This is going to be a deep one. Before we get into the stories, I want to take a moment to say a genuine thank you to everyone who's taken the time to give the show a 5-star rating. It means a lot, because those ratings actually help keep the podcast visible, recommended, and part of the algorithm that pushes it out to more people. And don't forget about the Christmas giveaway. If we hit 200 ratings before Christmas, we'll pick 2 listeners to receive 50 XRP each. If you've already given us a rating in the past, just comment "done" so we can make sure your name is included. It takes a few seconds, and it keeps this show growing without putting anything behind a paywall. Let's get into the coin prices to set the stage for the week we've had. Bitcoin is sitting around $84,465 after a shaky week, where it's tried to bounce, but hasn't been able to reclaim any of the psychological levels it lost earlier in the month. Ethereum's trading at about $2,744, not a disaster, but certainly below where bulls want it heading into December. XRP is around $1.92 with a slight pullback. BNB is holding a steady range at $827, and Solana has settled at roughly $127. Which is consistent with the broader downturn but still a far cry from its highs earlier in the year. Cardano is at roughly 40 cents, Dogecoin's just under 14 cents, Tron is holding around 27 cents, Litecoin is steady at $82, and Bitcoin Cash is having one of its better showings at $554. Those numbers tell the story, not a collapse, but definitely a bruised, exhausted market searching for direction. Let's start with one of the defining themes of the week. Bitcoin is heading toward its worst month since 2022. That's not hyperbole. It's backed by the data. The move below $100,000 was the trigger for a chain reaction. The moment that support broke, unrealized leverage began unwinding faster than new capital could enter the market. Marcus Thielen at 10x Research summed it up perfectly. Bitcoin didn't fall because investors suddenly lost conviction. It fell because leverage unwound faster than liquidity could catch it. And that's exactly what happened. When the market breaks a structural level, it doesn't matter how bullish the headlines are. The mechanics take over. Traders reduce risk. Market makers widen spreads. Algorithms flip from buying to selling. And all of that compounds into sharp, relentless downside pressure. Zooming out, this week also cemented another major point. The crypto market has lost more than $1 trillion in the past 6 weeks. $1 trillion. And it didn't happen because of one headline or one catalyst. It happened because global risk appetite has taken a hit. Tech stocks are struggling. Bond markets are volatile. Inflation expectations are uneven. And when that macro environment shifts, crypto behaves more like a high-beta tech asset than an independent store of value. The Economist said earlier this week that crypto got everything it wanted in terms of legitimacy. ETFs, regulatory clarity, institutional access, and yet it still sank. That's because narratives don't hold markets up when macro pressure is this heavy. Then we've got the moment that grabbed the most attention. Bitcoin dropping into the mid-$80,000. It wasn't a flash crash. There was no catastrophic news story behind it. It was simply the moment where structural weakness revealed itself. James Check at Glassnode said, "The low $80,000 region is where weak hands capitulate and strong hands quietly reload. That's the sort of environment we've been in. The place where nobody is buying aggressively, but the forced selling is gradually slowing down. And that dynamic alone tells us the market's transitioning from panic to fatigue." That takes us straight into one of the most dramatic events of the week. More than $2.2 billion in liquidations across the crypto market in just 24 hours. And this wasn't just over-leveraged retail traders getting wiped out. This was thin liquidity, market maker retreat, and automated selling hitting every major layer of the market. When volatility spikes and order books thin, Even medium-sized sell orders can have an outsized impact. Ethereum, Solana, Dogecoin, XRP, almost everything saw the effects. And this is exactly the kind of environment where liquidations snowball into larger moves, even without negative headlines. We are going to take a quick break here for a word from our sponsors. Stay with us.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
This is the perfect moment to bring in the broader psychological layer behind what's been happening, because the price action alone doesn't explain the speed or the intensity of the sell-offs this week. What we've witnessed is a classic sentiment vacuum, where price falls faster than narrative can update. 1 month ago, when Bitcoin was above $100,000, the sentiment was euphoric. Analysts were talking about blow-off tops, sovereign accumulation, ETFs breaking records. But once price breaks a structural level, the entire emotional tone of the market flips almost instantly. Traders begin second-guessing their entries. Long-term holders start questioning macro. Short-term speculators exit the market entirely. And you can feel that shift on social media. Excitement becomes frustration. Confidence turns into hesitation. And even small green candles are met with suspicion. But here's the part most people miss. This psychological reset is actually a healthy sign. This is the phase where hype dies, excess leverage evaporates, and markets begin to stabilize. Analyst Katie Stockton from Fairlead Strategies captured it perfectly when she said, "Markets recover when apathy replaces euphoria." And that's what we're seeing now. Not panic, not capitulation, but apathy. And apathy is the soil where the next accumulation phase begins. Stronger hands start buying when nobody cares. Narratives get ignored. People stop trying to call the bottom. And slowly, confidence returns. This isn't the beginning of a new rally. It's the beginning of the market regaining its balance. Now, interestingly, even inside all of this chaos, a handful of altcoins managed to outperform this week. Tokens like Audiera, Grass, and Tensor. These micro-cap, early-stage projects tend to behave differently during market downturns because they're not held by institutions, and they're not driven by large macro flows. Their communities are small, their catalysts are niche, and sometimes they move in completely different cycles. Matt Hoogan from Bitwise said, "Mini bull markets can form inside major corrections," and that's exactly what we saw. While Bitcoin and Ethereum were bleeding, some of these altcoins were posting green weekly candles simply because they sit in their own self-contained ecosystems. Another story that carried weight this week was the drop in corporate crypto treasuries, falling from $176 billion down to around $99 billion. That's a huge shift. It doesn't necessarily mean institutions are selling, the majority aren't, but it does mean they're not adding. Corporate exposure has shrunk. Valuations of publicly traded crypto companies have declined, and investor risk appetite from the corporate side is clearly cooling. When institutional flows slow down, markets lose a core source of support. And right now, that's exactly where we are. So let's take a moment and look ahead to next week, because while this week felt heavy, the early signals for the coming days are more mixed, and in some cases, slightly more encouraging. First, risk appetite. Forex.com pointed out in their weekly outlook that while risk appetite has been decreasing overall, it's starting to show signs of flattening out rather than accelerating downward. That doesn't mean a reversal is coming. It just means the bleeding may be slowing. Stability always comes before recovery. Add to this the shift in interest rate expectations. CryptoSlate noted that the odds of a December rate cut have quietly started rising again. And whether we like it or not, crypto trades as a macro-sensitive asset right now. When expectations shift toward easing, crypto often stabilizes. On top of that, next week has a handful of governance votes, network updates, and small project launches highlighted by CoinMarketCap. These aren't major events on their own, but they can create positive sentiment pockets inside broader consolidations. The bottom line is this: the market is bruised, not broken. The momentum has cooled, the leverage has unwound, and speculation has been flushed out. These are the exact foundations upon which stability, and eventually recovery, get built. And that brings us to the end of this week's roundup. A massive thank you again to everyone who's given us a 5-star rating, and don't forget, if we hit 200 ratings before Christmas, we're giving away 50 XRP to 2 lucky listeners. Just comment "done" so we can include your name. It helps more than you know, and it keeps the show completely free. Drop your thoughts in the comments, hit follow, and we will see you at the top.